topic from the exam point of view, that is techniques of the capital budgeting. Okay. So before to proceed, I would like to say, if you have not downloaded the Adda 247 application, download and subscribe the Officers Adda 247 YouTube channel, so that you can get notifications of the live sessions. You can get regular update from our side. Okay. Before to proceed, I would also like to say that our target batch is started, and your AB class is going to start from the 11th of April. So this is a very right time. This is not the time when you just sit back and relax, like the JAIIB examination is so far away, like 30 to 40 days. Okay. But this is a very correct time that you should start your preparation. Okay. So in this target batch, the very important thing that you are going to get a multiple mock test, you are going to get multiple ebooks, you are going to get like 130 plus hours live classes where you can just interact live with us. Okay. As well as the very important thing that you just do not need to make any study plan by your side. We are here for you. Okay. We are making a perfect study plan, like in which day you just have to read that topic. Okay. And that batches is fully exam oriented. Like whatever we are going to discuss, that all are based on the previous year memory based questions. Like if I'm talking about my sessions, that I will discuss everything that fully exam oriented. Okay. So you just do not need to worry about that. I will discuss everything from the basic to advanced level. So you just do not need to make any time plan, time study plan, time management. We all are here for you. Okay. We all officers under 247 faculties are here for you. So you can enroll in our batches. And enrolling process is also very simple. And at the last I will just tell you how you can enroll in our batches, and this is also at very convenient price. Like you just do not like you only have to use the code, that is Y422, and with this code you are going to get a big discount on the batches. Okay, so you can enroll in our batches and you just apply the code, that is Y422, and with this you are going to get a big discount, right? So now today's session is a capital budgeting methods. And in the last lecture, in the previous sessions, we discussed what is capital budgeting, what are the cash flow, and what the relationship between the present value, future value, what we understand by the present value interest factor, what is the relationship between the discount factor and the discount rate. That all we discussed in the previous lecture. Okay. So again, this lecture is going to be very important, because capital budgeting is a chapter from where you are getting a multiple questions in the examination. Like you are going to get theoretical as well as the numerical as well as the conceptual questions. So that chapter is a very important to understand. Okay, so now let's start today's session with a very important method, that is net present value method. Okay, so let me fix this. So in the capital budgeting, the first method, that net present value method, and all what why we are discussing the different methods in the capital budgeting. Okay, the very important thing that we have to understand, because if I am talking about any company, okay, if I am talking about any company, and this will be apply, like this example will be apply on the capital budgeting chapter. Okay, why we introduced, or say why we have to study this chapter in the accounting. So we are going to understand, like from the example, suppose that this is a company and this company is having a two proposals, right? Suppose that this is a one proposal that is about the project A, and this is another proposal that is about the project B, right? So now the question is, in which project company should invest? The main thing that the question that, like, company, in which project company should invest, and company is having, suppose that 1 lakh rupees, and company just want to infuse 1 lakh rupees in any project for getting the income, right? For getting the income, or for future investment, right? So for investment purpose, in which project the company should invest? So from these projects, suppose that this is the example like project A, B, maybe a company is having a more project like C, D, E. Okay, but in this example we are considering the two projects. Okay, so now the question is in which project the company should invest. So for getting this answer, like in which project the company should invest, there are different methods that just evaluated for calculating this. Like from that project, like from which project you are going to get maximum return, that project should be chosen, and with that project just company go forward. Okay, so suppose that there are different method, and the net present value method we are going to understand. This is the first method from the your exam point of view. This method is a very important. Okay, so in the net present value method, like I discussed the formula of the present value and the future value, and that formula will be very beneficial for you in the three chapters like annuities, bond, as well as this capital budgeting chapter. That is present value and it is equal to the future value, and it would be divided by the 1 plus r to the power n, which is also can be write as a present value that is equal to the future value, and it would be multiplied by the discount factor. Okay, so discount factor is nothing. Discount factor is your 1 divided by 1 plus r to the power n, which is there is r that is known as the discount rate. Okay, that all we actually discussed, right? So that method, I think that formula, I think everyone has memorized now. So now, what is NPV method and what we understand by the net present value method? Whenever we see a word like net, okay, that means we actually have to subtract something from something, right? So whenever we are talking about net present value method, that actually equals to the investment plus present value of all future cash inflow, right? So whenever we are talking about any net present value method, right? So we have to calculate the net present value method, and how we can calculate the present value? We calculate the present value in terms of the future value, right? So we can also relate with that, like this is your future cash inflow. All right. So we have to just write the formula, that is minus investment plus present value of all future cash inflow. Okay. So in the net present value method, we actually compare the present value of future cash inflow with its investment, with company's investment. Okay. So that is basically the formula for the your net present value method, right? I hope it is understandable for everyone. Okay, so in this method we can determine like whatever the investment opportunity that provides if a surplus, when the cash flows are measured in the present value terms. So what if net present value you are getting in the negative? That means present value of all future cash inflow is less than the company's investment. So suppose that we can relate it this like company's investment in any company is in any project like 40 lakh rupees. Okay, and meanwhile if we just relate with the present value of all future cash inflow, that also we can understand that is with the expected rate of return. Okay, so if companies is investing in the 40 lakh rupees in any project, and for like suppose that for 5 years. Okay, for 5 years, and company is getting a 38 lakh rupees for 5 years, like, okay, that present value of all future cash inflow, like that is 30 lakh is obtaining. That means the net present value is negative. What it means? It means that company should not go with that project. Okay, company should skip that project. So the surplus is actually just understand as a deficit surplus. Okay, that is not that is not relates to a surplus, that is actually a deficit. Okay, that is actually understand as a deficit. and that question is actually asked in the examination. Like if the NPV is a positive, so what we understand with the positive, what we understand by the if it is less than the zero, okay, so that is not a surplus, that is a deficit. So it is actually considered as a, as a loss, and it would reduce the wealth of the shareholders or companies invest, or say companies value, okay, companies we can also say companies fund, okay. So that is actually relates to a loss of the wealth. I hope it is understandable. And if I say that net present value is greater than zero, that it means company should go with that project. Okay. So if I say, suppose that NPV of any project A is greater than NPV of any project B, that means like company should go with the project A. Okay, so from that now you are going to get some theoretical question, also you can get the numerical question. Okay, so how to solve the numerical question in the examination, we can we just understand probably in this lecture or next lecture. Okay, so just do not worry. Now we are going to understand internal rate of return method. So internal rate of return method is actually the second method from that a company can choose the project, like company should go forward with that project or not. Okay, but this is quite complicated method, because there are so much calculation while you just using this method. Okay, so you have to do like so many calculation, that's why it is understandable as a complicated method. Okay, so internal rate of return method is actually the discount rate. It is a discount rate that makes the net present value equals to zero. And what we understand by the discount rate, if I am saying that, what we understand by the discount rate, that is, it is a discount rate that we understand by the term that is R, that we understand like 1 divided by 1 plus R to the power n, when we are going to understand about the relationship between the present value and the future value. Okay, so where this R actually known as the discount rate. Okay, that's why I introduced another term like discount factor. So what the relationship between the discount factor and discount rate, that is 1 divided by the 1 plus R to the power n, and this is known as a discount rate. Okay, so basically it is the rate, or say it is a discount rate at which the net present value becomes zero. Or either you can also say that is, it is a discount rate that makes the net present value of all cash flows equal to zero. And it rely on the same formula of like we discussed in the net present value method. So like if I'm talking about the net present value method, like minus investment, because why we are considering the investment with the negative figure, because if companies is investing in any project, that means a cash or say money is going out from the company, that's why it is considered as a with a negative figure, plus present value of all future cash inflows. Okay, so that's how we actually calculate the net present value, because when we are going to solve the internal rate of return method, that means this value should be equal to zero. So we can also write by this way, that is minus investment plus present value of all future cash inflows. So that's how we can write this method. Okay, so this is how we can solve. But in the examination, like you have a so you do not have a so much time, and examiner also just do not want to check your calculation. Examiner only want to check your knowledge about the accounting. Okay, so that's why you hardly get the question related to this method. But in the theoretical form you will definitely get the question related to internal rate of return method. Like in the theoretical form, maybe the question that is like the equation like it is given. All right, so it may be, and if it just come in the examination, so you can use the method that is hit and trial method, right? So like how you can solve the questions in the examination, we are going to understand that. Okay, so just understand, suppose that if any investor, if a company is investing in any land, okay, so this is a land, and like I take an example of this, like the company is investing the 40 lakh rupees on this land for purchasing, for acquiring this land for the rent purposes, okay. And from rent, this company is going to receive every year 4 lakh rupees. Every year 4 lakh rupees company is going to receive, okay. So we are considering the 3 years, okay, all right. So suppose that company is just rented out this land for the 3 years, and per year the company is going to receive the cash, that is 4 lakh rupees, right? So now we have to calculate the discount rate, that at what discount rate the company is expecting, or say expected rate of return, okay. So like investment is a 40 lakh, and the future cash inflows, that is your 4 lakh rupees, okay. So if we are just making in the on the timeline, so this would be minus 40 lakh rupees, because this is considered as a cash outflow of the company, and this will be considered as a cash inflow of the company, but this is a future cash inflow of the company, all right. So now if we have to calculate, like I said, or say like I explained, the relationship between the present value and the future value, okay. So what the relationship I explained you, first you have to write this, that is minus investment plus present value of all future cash inflows, okay. So suppose that if I'm talking about for this year, that is 4 lakh rupees the company is receiving for the first year, okay. So that would be equal to 1 plus r to the power n, which is like and the value of the n, that would be equal to the 1, okay. Because number of the period we calculate, or like what we understand by the n here, that is number of the period, okay. So now, if you're talking about again for the second year, that is 4 lakh rupees is receiving. So now we are using the term, that is 1 plus r to the power 2. Now the value of the n would be 2. Now for the third year, if I am talking about, so now the value would be 3. Okay. So likewise, we can calculate the present value of all future cash inflows. All right, I hope it is understandable for everyone. So this is your internal rate of return method, where your net present value just equal to 0. And this is the formula of the net present value method we discussed, like NPV, that is equal to the minus investment plus all future cash inflows, okay. So because we are just solving the internal rate of return method, so that value would be equal to 0. Now in the examination, suppose that the question is like just find out the value of the r, okay. So how you can calculate? Now the thing that you have to use the hit and trial method for calculating that, okay. And another method you can also use, like interpolation method, that is considered as an interpolation method. But again, it is so much time consuming, and examiner just do not want to check your calculation. Just first understand that examiner only want to check your knowledge, okay. But we have to just cover also this, because this is a part of your syllabus. So that's why I am explaining you. Meanwhile, I am also just explaining you that this is more than sufficient to understand about the internal rate of return method, okay. So suppose that if I'm talking about this hit and trial method, there are so many options given. Suppose that 10% given, 11% given, like option third, suppose that 9% given, option four, suppose that 8.5% given. So you only have to put this value here, and if this value would be equal to 40, that means your internal rate of return method, that would be equal to 0. That means that value of the r would be your answer of this question, okay. I hope it is understandable, okay. So if I'm talking about another method that you can use, that is interpolation method. So what we do in the interpolation method, that is internal rate of return, that will be equal to, that is lower rate, okay. plus net present value. Just let me erase all the stuff here. Okay. So what we write, that is, if I'm talking about the interpolation method, this is not so much important to understand. Okay. I'm not just confusing you that you just learn like formula and interpolation method. This is not so much important. Okay. But it is a part of syllabus. That's why I'm covering that. So you can also use the method, that is interpolation method. Suppose that the lower rate you are choosing, that is 10% plus the 1 minute. Let me erase this. Okay. So you can just write here, that is internal rate of return method is equal to lower rate plus net present value at the lower rate, and it would be divided by the net present value lower rate minus net present value minus net present value at the higher rate, and it would be multiplied by the higher rate minus lower rate. So that's how we can just use the formula of the interpolation. Okay. So what we exactly do, suppose that discount factor is given for the cash inflow, and you can easily calculate the net present value by discount factor. So suppose that if I'm talking about at 10%, like your NPV is positive, and at 12% your NPV is negative. So just understand that you have to choose two different percentage here, two different or say two different discount rate here. So for one, the net present value would be positive, and for say another one, the net present value should be negative. Okay. So suppose that at 10% your net present value is equal to the 5,000, and for 12% your net present value is minus 4,000. Okay. So this is your value. So how you can just calculate here, like you have to lower rate, that is equal to 10 plus now the net present value at the lower rate, which is you are just going to get, that is 5,000. So just write here 5,000, it would be divided by the 5,000 minus and minus plus, that means that would be equal to 4,000, and it would be multiplied by the higher rate minus lower rate. So this is how we can solve the question here. So if we are going to further solve this, then this 5,000 multiplied by the 2, that would be equal to 10,000, and that would be equal to 9,000. Again, you can just write it, that is 1.11. So this would be equal to 11.11. So that would be your value of the discount rate. So this is another method for calculating the internal rate of return method. Okay. But in the exam, like from the exam point of view, of if I'm saying that only you have to understand like the formula that we are using the same in the net present value method, that is minus investment, because companies investing in any project, that means money is going out from the company, that means we are using the investment with a negative figure plus present value of all future cash inflows. And you now understand that what is the relationship between the present value and the future value, and in the internal rate of return method that value would be equal to 0. Okay, so you only have to write here 0, and now you can easily calculate any kind of the question from the internal rate of return method. Okay, now another method, that is your payback method. And what we understand by the payback method, and this is a very simplest method to understand, like it adopts the most straightforward approach to your like to the companies, like company can easily find out which project should be choose. Okay, so it simply measures the time period of the investment, like in what time period the investment is just or say investment will come back into the business. So we can understand with the example, like suppose that any company, like this is a company which is named as XYZ Limited, and this company is investing in any one of the project from these two projects. Okay, and company have to find out which project should be suitable. So for that, suppose that if company is just investing the 50,000 rupees in each project, like project A and project B, and suppose that, and if we are just making the table here, okay, so suppose that 50,000 rupees companies is investing, and from the project A, company's future cash inflow for the first year, that would be equal to 5,000. For the second year, that would be 15,000. For the third year, that is a 20,000. For the fourth year, that is 10,000. Okay. And from project B, like company is receiving the 10,000. For the second year, company is receiving the 5,000. For the third year, company receiving the 5,000. For the fourth year, company receiving the 5,000. And for the fifth year, company receiving the 25,000 rupees. Okay. So if we are just going to add all the like all the numericals here, all the sums here, like 5,000 plus 15,000 plus 20,000 plus 10,000, if we just sum all the digits here, so we can just understand, like in the 4 years from the project A, company is going to receive that 50,000 rupees. And if we are adding from the project B, like if we are adding like digits from the project B, then it will be equal to your like that, then it will be taking the 5 years. Okay, so that means company should choose the project A, because from the project A, company's investment just return back in the 4 years, while from the project B, the investment is going to just back into the business in the 5 years. Okay, so that's why company should go with the project A. And look how simple we can just calculate through the payback method. Okay, so this is the most straightforward method, and from that you are going to get definitely question in the examination in the 2 marks. Okay, so that method is a very important to understand. I hope it is so much easy to understand now, and it is so understandable. Okay, so that's all for this session. Now I'm going to show you how you can enroll in a target batch, because this target batch is a very important if you are aiming for this upcoming JAIIB examination. Okay, because this is a not a exam where you can get the easy moderate question. Here you have to be a fully focused on the basic concepts of every subject. Okay, and that all you are getting in our target batch, like you will get everything like mock test, ebooks, as well as the live sessions. Okay, and that's a very important for clearing your examination. So now I'm just showing you how you can enroll in a target batch. So you just first have to visit the Adda 247 website. Let me show here. Okay, so this is your adda247.com, that is your website, and after that you have to go to the JIB CIB section, where you can find the JIB CIB and another competitive examination related videos. Okay, so you have to go to the JIB section, where you can find multiple batches that is actually running for you. Okay, you can enroll in any kind of the batch, and meanwhile you can also enroll in any particular batch like PPB, LRB, AFB. Okay, so I'm just talking about, if I'm talking about the new target batch that is already started, and your AB class is going to start from the 11th of April. Okay, so you have to simply just go to the JIB target batch, and where you can find multiple things that is equally important for you, like mock test you are getting, ebooks you are getting, and 130 hours live classes you are getting. And the most important thing, that the study plan, like PPB study plan, AB study plan, and LRB study plan, you all are going to get this. Okay, after that you have to go to the buy now section, where you have to use the code, that is Y422. Let me write here. So you have to use the code Y422, and with this code you are going to get a maximum discount. Okay, so you can see now the price is so much reduced, and this is a very right opportunity that you all should enroll in our target batch. Okay, because this is only one time investment, right? So now I would like to say thanks for watching me here. Thanks for joining me here. Like this video if you're liking our effort, liking our content. Share this video to your friends so that maximum number of our colleagues can join with us. So once again, thanks for watching me here.